And welcome out to the Tackle Trading Halftime Report. It is June 3rd, 2019. We have myself, Coach Cody, and Coach Mark here today. I'm not even going to bother asking you how you're doing, Mark, because I already
Tony,
know you're having a
who
great
says
time.
you can't teach young people? Who says you can't teach young people? You learn. You learn. I love it.
Jump right into it. Markets are down. We were in pre-production talking about how tech was just falling through. Both of us getting excited, looking at some short-term positions just to add to this drop, possibly pick up some shares at cheap prices, or even sell naked puts to pick them up at cheaper prices.
No, I mean it's a fascinating market right now. Let's just pull up charts. So let's get right at it. Let's pull up the markets. Right now, you have a fascinating market today. You have a flight to dividend-paying stocks. As I look at my 100 trading instruments that I follow, I've got a screen, follow them. What's up right now? BX, big dividend payer. ExxonMobil, BP, dividend payers. Coca-Cola, dividend payers. Home builders are up, dividend payers. You also have CVS, huge downtrending stock. Walgreens, huge downtrending stock, both up today. Verizon, AT&T up today. Your dividend-paying stocks today in a flight to, hey, I got to put my money somewhere. That's straight out of the Mark Justice trade war playbook. Where does money flow when you're uncertain? Gold, up today. Dividend payers, up today.
Absolutely.
Those types of companies are where money is flowing today in this tremendously uncertain environment. I mean, the trade war has never been more uncertain, with the announcement of potential tariffs on Mexico, an escalation to multiple fronts, the unresolved nature. You got this incredibly uncertain market. Where's money flowing today? It's flowing to these dividend-paying companies. Now, is that a sign of strength of the overall market? I don't think so at all. I think money, big money.
They're going to safety. They're going to dividends. They're going to staples, things that are going to be bought regardless of what the market does, is where everything's flowing right now. Things are flowing.
Absolutely.
They're coming out of, especially with tech being hit as hard as it is today. Like, Jesus.
And welcome out to the halftime report, everyone. We're going to talk about gold. We're going to talk about oil. We're going to talk about the markets. And we're going to talk a lot about tech today, because tech is having a synchronized sell-off, breaking support levels.
Tech. Oh, my God.
Across the board. We talked about this a little bit in the Traders Lounge this morning, this break of support levels. Now, I'm here all by myself with our normal host, Cody, because I'm the last line of defense at Tackle Trading. When everyone else is busy. That's a good
segue. Why are they busy, Mark?
Well, we got the STEP system release on Wednesday. This huge product that we've been promoting for weeks, talking about how we analyze, find. It is this, 12-hour course, 10-hour course. It is the webinar on Wednesday night is going to be talking about this new product release we have on Wednesday. And everybody's busy. And so when everyone's busy, when everyone is packed to the gills and have no time, who shows up? The last line of defense.
Hey, I'm always here too. Then again,
you're the staple. You're the
host.
I
was going to say I'm the staple of YouTube channels, so that is true.
So, and it's a fascinating market.
Jess is the staple of the YouTube channel. She's got all that.
And it's a fascinating market. Now, if you're a pro member and you attend the Traders Lounge and you listen to me or you've seen me think, you know what my trade war playbook is. Now, we always have, the directional bearish setups have been pretty decent, especially for these short-term bursts. Pull up Facebook right now.
Oh, I'm looking forward to pulling up Facebook.
We had Facebook on the bearish options report. We had a support level that had formed, short-term support level in recent weeks. We had a threaten to break that support level heading into the week. And boy, it sure has accommodated, hasn't it? Break of support. And once horizontal support gives out and you don't have another level of support in the horizon, you can have tremendous downward movement. We're seeing this in a lot of the areas of the market, in the tech sector. Pull up CRM.
CRM.
Now, I want you to look at these horizontal support levels.
Oh.
Look, draw a line on that horizontal, and that was a multi-month support level. It breaks, tremendous downward possibilities.
I hate that this thing has earnings tomorrow because
it's a beautiful trade setup, isn't it?
I know that all that hurts. Like easy
and
first
Cody,
target right here.
Where's the next support level? Where's the next support level?
140 from there, and then after that 130. It's like this thing is so easy to trade into and target.
Pull up Microsoft. Great fundamental company. Been in a long term uptrend. But when we analyze the short-term support levels, draw a line where that support level is. Not the next one, like the previous
one. The one that broke?
Yeah.
Right there.
So heading into today, you had these support levels that many tech companies were on the cusp of, sitting at these support levels with no support. Now, this is technical analysis core, just at its core. When these support levels break and there's not another support level, you don't want to be on the other side of the trade. These are things that if you owned Microsoft, let's say you own Microsoft, would it be totally reasonable to own Microsoft? Of course it would. Good fundamental company, long-term uptrend. But get those Fibonacci's off my chart.
No, I was sitting there staring at this thing and I was like, that fib looks like it's going to fit pretty darn well. And you know what? Support level, support level, support level, support level. That fib fits pretty well to Microsoft right there.
Yeah, but that's a discussion for 4 days from now when we're down at those support levels and maybe.
Yeah, now I can easily target back. It's like, okay, right there, 116. Oh, below that, 112, which also happens to be the 200. And the 100 is going to be at 116. It's like the fib and your moving averages are lining up right here.
Yeah, it is. It looks, but once again, that's a conversation for 3 or 4 days from now when we're looking to get out of a bearish trade or looking to re-enter into a longer-term bullish position trade.
Yes.
When we're at these support levels, and today is a great example. Yeah, we have directional trade setups we can do. But what about cash flow investors? Lots of people own Microsoft.
Mm-hmm.
When we're at support levels and we break those support levels, this is what separates the pro level cash flow investor from the novice. Moments like these, because let's say we own Microsoft and wanted to own Microsoft as part of our long-term portfolio, and we're just dead set. Lots of people fit that category. Lots of individuals are in that. What separates the pros from the rookies is what you do on these major bearish signals on cash flow positions that you have as part of a long-term portfolio plan. Individuals on these breaks can take all kinds of defensive strategies. I mean, what are a couple things that come to mind when this happens on those breaks?
Well, right there, what I was just doing is, if I like Microsoft as a long-term investment, I'd love to pick it up at $110 a share.
But let's say you already own it.
Oh, already own it?
You already own it.
If I already own this, when I saw this set up here and the market on Friday doing what it did, where it broke major support levels, I would have been buying puts to protect and to hedge and make sure that any of my cash flow strategies, any, covered calls I might have on this are going to be hedged to the downside. And then once this thing, finds a new bottom, I pull those puts off and I start my cash flow again.
Yeah. I mean, and these techniques, we talk all the time about protective puts. When we get a bearish signal, is it a good idea? Is it a higher probability setup to buy a put anyways, just as an independent trade? Yeah, and so when we combine our knowledge of short-term signals with our longer-term cash flow positions, we really start getting in a position where we can maximize our overall returns. When we look at those returns for 6 months, for a year, for 10 years on these cash flow positions that we decide to own, how we manage those signals heading into bearish environments. Because did Microsoft telegraph this for the last 3 weeks? Kind of.
Yeah. You could have even started at their earnings when they gapped up thinking, you know what, they're probably going to do a gap fill. We actually, as they held the high base, we were like, okay, this is a high base setup. We thought they were going to continue. But then they broke down. Pattern changes. This is no longer.
Pattern changes, consolidates, forms a support level,
Yep.
comes up to that rising, what is that, 50-day moving average?
That's the 50 here.
Rising 50-day, finds a little bit of support on that first test, and breaks down to that horizontal support. Adjusting your sold calls, selling in the money sold calls, long-term protective puts on these signals. This is what pro cash flow investors do. Pro cash flow investors do not buy and hold and do nothing.
I really like what you just said, the selling in the money calls, because we always talk about rolling calls out. You can roll it down. If you have a call that, let's say you sold a call at 135, you could have rolled that thing down, to 115, 120, roll it into the money. And then, yeah, that would protect you to the downside.
And what pros do is they have signals, events that occur on the chart, a breaking of horizontal support, absolutely one of those, in which they have a signal that triggers an action. They just don't randomly sell in the money calls because they're scared. They just don't randomly do things because they're worried. They just don't randomly do things because there's a down day. There are events that happen on the chart, key events, breaking of support levels where you don't have support levels underneath. That's where, and on those specific signals, they take a specific action. They take a specific action. I've been working on cash flow strategies for 3.5 weeks now because that's part of my trade war playbook. Go to ExxonMobil. Let's talk. Well, let's go to gold. Let's go to gold first. Let's go to /GC.
All right, /GC. Let me go back to a daily real quick.
All right. We're pretty simple people at Tackle Trading. Even with some advanced knowledge, we're pretty simple people. We always talk about gold. We always talk about gold. We've talked about the fundamentals of gold for months and months. Even during the downtrend, we never got overly bearish. I mean, Cody, how many times have you heard me say long-term fundamentals of gold are strong? No matter what the technical setup has sold. How many times?
Which is also why we always say, like, it's bearish right now, but most of us here at Tackle do not short gold.
And how many times have you heard about gold as a defensive portion of your portfolio? A defensive portion of your portfolio.
Over.
I mean, we talk about that all the time.
We have an entire system that Matt built behind gold and cash flowing off gold to buy physical gold to protect your portfolio.
And you have seen on gold mining companies, so whether it's gold itself or gold mining companies, go to WPM.
WPM.
A stock I've talked about several times. You've seen technical setups over the last week or the last 2 weeks where you've closed above 20-day moving averages, you've broken shorter term resistance levels, followed by intermediate support levels forming. Go to Newmont Mining, NEM.
I like
NEM.
Newmont. Oh, NEM? I'm thinking
you saw this across the gold mining sector. Short-term support levels form, reversal signals occur, and then just take off in this environment. Like having a balanced trading portfolio or having a balanced investing portfolio where you have a portion in things other than just equities can make the world of difference in an environment like this. Like, how do you think people with a good percentage of gold have done over the last few days that have been cash
Very
flowing
happy.
for
Very
months.
happy.
They're very happy. It's not that you have your whole portfolio in gold. It's not that you have half your portfolio in gold. It's not that you have a quarter of your portfolio in gold. But when the environment is right, as long as the fundamentals are decent on gold. And one of the things on fundamentals, there is a correlation between Federal Reserve action and gold prices. When gold prices were going down last year, what was the Fed doing?
I'm sorry. When the Fed was raising rates,
were
during
going
gold
down
was going down.
What was the Fed doing?
They started raising rates, and then they took pauses, and that's when gold was coming down.
And what was their rhetoric? Was it hawkish or dovish last year?
Last year was hawkish. It switched to more hawkish stance late in the year, early this year.
Yeah, and while there isn't a one-to-one correlation, this is a big correlating factor with gold. We all know what the Fed's been doing this year. Very dovish, that hawkish language in the background. So even when you see declines in gold, you know that as long as the Fed's not raising rates, as long as the Fed is putting out very dovish language, there is a fundamental support level to gold. Is one of the reasons I didn't exit any of my gold positions. I was looking to add more. And then when you get a catalyst, a flight to safety, you can see this big uptick in gold. I mean, gold is a great area to have a little bit of your portfolio in, to develop cash flow strategy.
That goes to what you and I were talking about before the show started. When you buy your gold positions and you start cash flowing on them, you're not worried about the day-to-day fluctuations. That number is like, how'd you put it? That money's gone. You don't care if it goes up, down, sideways, or in circles. You just know that it's going to cash flow till the day you die. And I believe that's paraphrasing exactly what you said.
I think that is paraphrasing exactly what I said, unless I can make some short-term profit. And I think that
comes down to a lot of our students that start getting into cash flow. They want to adjust their cash flow strategies too much because they're seeing any fluctuations. Whereas, if you're going to cover call on something, just sell it, forget it until you get that signal to, hey, I should protect this. But with gold being a beautiful way to protect your portfolio long term and to cash flow long term, buy it and hold it till the day you die.
I love the halftime report when it's just you and me, Cody. I like this.
Yeah, no, I was doing some of the best of halftime, and I found I think the first one, it was just you and I. I was like, this was a good show right here. I'm like, we got some good nuggets in there for our students. Yeah, I agree with you.
Let's dive deeper into my personal, because the market, like today's market, is like a Mark Justice defensive trade war market. Go to ExxonMobil.
XOM.
What's ExxonMobil doing today?
ExxonMobil is up today, gap up actually over the weekend after it had this breakdown, and it is currently sitting at a previous support level.
All right. Now, if we identify longer term areas on the chart, let's go to a 2-year weekly or some type of longer. One thing I like to do on these dividend stocks, and go to a 10-year weekly.
10-year weekly.
10-year weekly. What I like to do on dividend stocks is I like to start the beginning stages in these volatile environments, because I got a portion of my portfolio that's always available for short-term directional trading. That never changes. A maximum amount that I'm willing to trade on different setups that occur at all given times. But that's not all my money. It's not all most people's money. We have a portion of our portfolio that's always available to us. Now, what are some options to do in a crazy market with that portion of our non-directional trading account, that non-directional investing account? What are some
fundamental sections.
What are some just general things? What do people do when the market's freaking out? They'll go to cash.
They pray.
Like you'll hear, hey, go to cash. I mean, you've heard lots of people, not just here at Tackle Trading over the last few weeks, saying, hey, cash isn't a bad position if you're unsure.
Nope. No, it's not.
You hear that? Generally good advice. Hey, people that went to cash a couple weeks ago that didn't know how to take advantage of bearish setups, was that a bad thing for them to do in an uncertain market? Go to cash?
No.
It was a pretty decent decision, wasn't it?
Yeah, it is. Yeah, cash is not a bad place to put your money right now.
Cash until if you don't have the knowledge to take advantage of directional setups, which shameless plug time, the Step System webinar on Wednesday night, we'll talk about how to take advantage of bearish and bullish directional setups. Noah and Matt are going to knock that out of the park. Noah and Matt are two of the best presenters I've ever seen in my life in any industry. They're absolutely great presenters, and it is going to be an absolute worthwhile, stellar show because I've seen those two present. They're amazing. They're amazing. So, but if we don't have that directional knowledge, like buying and holding, it's just dumb. It's just dumb. Doing things with a longer perspective, well, that's what you see market participants doing today. All right, so when I start to look at dividend-paying candidates, what I love to potentially happen is to find those long-term support levels. We look at ExxonMobil, and we're looking at the last 8 years. We see a general support level where ExxonMobil has tested multiple times over multiple years, just south of $70 in that 67, 68, 69 dollar range. Came down in 2011, came down in 2015, came down there again last year. This broad support level. I love finding these broad support levels because these really long-term support levels, what do they have a tendency to do, Cody?
Long-term support levels?
Yeah.
Right here on ExxonMobil?
Well, just in general, as a general concept, what do long-term support levels have the tendency of doing?
To hold.
They have a tendency to hold.
They have a tendency to hold. They do.
All right. What's our dividend yield on ExxonMobil right now?
Let's see here. It's paying about 87 cents on a $71 stock.
All right, so 87 cents per quarter.
Yep.
Now, what is the history of ExxonMobil? Now, what do you think out there at halftime? And give us a like, give us a thumbs up. You know, if you like this discussion on dividend-paying stocks and potential entry methods. So, I mean, we're going through some basic criteria of what I look for in a crazy market like this to potentially enter. ExxonMobil's dividend history.
Mm-hmm.
Has it continually gone up for decades?
Yes, it has.
Have they continually paid more and more dividend out over time?
Yes, they have.
Yes, they have. ExxonMobil, do we have a relatively large and stable company?
Yes.
In ExxonMobil?
I don't think Exxon is going anywhere anytime soon.
Yeah, but these are some of the basic criterias. And so when somebody out there in chat, and Cody, could you see it? So what's that dividend payment right now as it currently stands? Not even calculating what it might go up to. So we got 87 cents times 4 quarters. What's that? 320, 348?
It's about $3. I just did it on the calculator. It's about $3. Divide that by about
$3.48.
It's about 3.5 to 4% dividend annually right now.
All right. Okay, so we have something in that 3.5, 4%. That's start where when I can get a large company that I believe in the long-term stability, coming down to a support level that pays in that 4% range on a dividend, I start getting really, really excited. Now, do I go out and just max out the amount of shares that I want to buy? No, I don't do that on anything. I'm not irresponsible. I place bets, but I try not to gamble. And so I start selling puts near that support level, not for a cash flow investment, but to enter in to the first portion of a larger term trade, a longer term cash flow trade. So let's say I sell a 67.50, Cody. Divide 67.50, divide 348 by 67.50. So if I get put 100 shares of ExxonMobil at 67.50, what's 348? The dividend, annual dividend, then divided by 67.50.
Let's see here. 348 divided by 67.50. 0.5 is about a 5.1% dividend.
Oh, so all of a sudden on the levels I'm targeting. So what happens, Cody, now at expiration? One of two things will happen.
You will either pick up the shares on a company that you want to own that pays a dividend, or you don't pick up the shares and you collect the revenue from the sold put and the cash flow that way.
This is what I call a win-win situation.
Yes, it is.
I either
There's no other way to describe that.
I either pick up the credit for that sold put, make the money, or I get put 100 shares of a dividend paying stock at a 5% dividend. This is why you see this general mentality is not just a Mark Justice way of thinking. This is why in today's market, AT&T's up, ExxonMobil's up, BlackRock is up, Verizon's up, home builders are up, Coca-Cola's up. Because you can go to cash. That's a position. What do you see tons of market participants doing on one level or another today? Not going to cash, but flowing into dividend paying stocks.
Yes.
Flowing into dividend paying stocks. Because is it the worst thing in the world if a portion of your portfolio was 100 shares of ExxonMobil that you were getting paid a 5% dividend on, that you could also sell covered calls on?
So now you're getting an additional 2% per month on top of the 5% you're getting per year. So now we're getting, what, 24% on top of the 5%. So we're looking at 29% per year cash flow, not counting anything.
And let's say we can't get 2%. Let's say we can only get 1%.
All right, 1%. Yeah, still. So 12% per year plus 5%, 27% or 17%.
Like sitting in cash, I'll never criticize a person without knowledge for sitting in cash when they're uncertain. Portion of my portfolio is in cash, so I can have it available to get put stock. And here's the great thing, Cody. Am I done necessarily with ExxonMobil if I get put that first 100 shares?
No, not at all.
I only enter with a percentage of the overall shares I'm willing to own. Now, I might wait for a reversal signal for that second 100 shares. I may, if let's say ExxonMobil goes down in price, I am not necessarily unhappy, because this goes to what you and I were talking about, Cody, before the halftime show even started today. That money I've allocated for that 5% cash flowing covered call stock in ExxonMobil, that is just an instrument to cash flow now. It is just an instrument. ExxonMobil goes down a couple of dollars, and do I like it? But do I really care if I truly have that cash flow long-term mentality?
So I want to add to this point, because a lot of times, especially Matt's made an entire video about how the covered call is similar to owning a rent house. But yet when we have students that start the covered call, they're worried about the underlying stock losing value and everything. Don't do that, because when you buy a rent house, are you constantly calling a real estate agent saying, hey, what's my house worth today? Hey, what's my house worth today? Hey, what's my house? No, you bought the house and you're just going to rent it out. Like, that's what you're worried about. You're not trying to make sure that if the housing market goes down, you sell your rent house as fast as you can. You'll buy insurance on your rent house because you'll make sure that if it burns down, you're protected. Just like you can buy
and let's talk ExxonMobil. Like, I oftentimes bottom feed and then sell during uptrends when it gets up. That's how I approach this whole long-term cash flow environment. But let's say we owned ExxonMobil, and let's rewind to the conversation we had on Microsoft just a few minutes ago.
Mm-hmm.
If we just say, hey, I hold ExxonMobil forever, now that's not how I approached it, but let's say you did. Once again, you've seen those bearish signals flash over the last month where you could take proactive action on ExxonMobil. 7 trading sessions ago, broke support with no support underneath. A few months ago, broke major moving averages and then broke intraday support. There have been lots of signals that even if you were just managing a cash flow system, you say, because I know plenty of people out there in tackle trading, and even a higher percentage across, they just buy and hold. So even if you are just, I own these shares and I'm going to hold it, finding the signals on the chart, when to take proactive action, on how to protect the downside of the base investment, insurance, the selling of calls, managing those sold calls, rolling them down into in the money or at the money to increase the overall cash flow. These are things that we teach at Tackle Trading. These are things that we cover extensively at Tackle Trading. And they can really, really make a difference.
Mark, if you own a rent house on the coast and you see on the news that a hurricane's forming, are you going to go buy insurance? I know I am.
Well, once the hurricane's coming, hopefully I have long-term forecasts where I can buy that insurance cheaper. Because what happens?
Yes, absolutely. I'm just saying, let's say this is.
I like the analogy though. Yeah.
Yeah. This is the news. Hurricane's coming. Are you buy insurance?
I just doing a quick look at my things across the market really quick.
While we do that, let's just run through the different sectors really quickly. S&P had the gap down over the weekend, just holding a little doji coming in. I'm just going to kind of rapid fire through these. The Dow, which has actually been our weakest sector, is up just slightly. Actually, no, it's still down because of the gap down. Now, when we're talking about tech being down, of course, going to the NASDAQ being the tech-heavy sector, I
want everyone out there. We see the Dow holding its own today, but we see tech getting killed.
Yes.
Now I want everyone just to conceptually think right now, based on the conversations we've just had the last 15, 20 minutes on dividend paying stocks. What is one of the fundamental differences between tech and the Dow? Well, I mean, there are lots of little differences and obviously different companies, but based on the conversation we've had, I mean, what's some of the differences?
In the chat, guys, answer it.
Between the Dow and the NASDAQ. What is more prevalent in the Dow than the NASDAQ? The Dow has a lot more dividend-paying companies.
Easy. Yeah, easy. ExxonMobil, JP Morgan, CVS, Verizon.
We're seeing a different flight to safety today. Now, this is a little concerning to me about the overall market. Because once again, is a quick rush to dividend-paying stocks necessarily a healthy sign for the overall market? Or is it a money manager move and a defensive move in portfolios?
Well, it's definitely some defensive moves in portfolios right now.
Your
large funds, they are moving money right now. They are moving money out of your aggressive tech type sectors through your speculation type sectors, and they are moving money into the dividend paying, protective, utility, real estate, those type of sectors. Your staple. They're putting money where it's going to be okay over the next, this period.
I mean, because you get a temporary reprieve on the Dow, look at the lack of support underneath current levels right now. on the Dow.
Yep.
Let's go to the Qs. Look at the lack of support underneath the current levels right now.
Yeah.
At Tackle Trading, in our pro membership products, we call this, what do we call this, Team Tackle? What do we call when we get into a point in the chart where we lack support levels on the way down? Same thing applies to the upside, but that's not the market conditions we're in right now. What do we call this? Call this clear air.
I was going to say, I believe we call this clear air.
We call this clear air because there ain't nothing in the way of additional price movement in that direction from a technical analysis perspective. Yeah, you could go find a Fibonacci line. There might be a long-term moving average. There might be things that we incorporate into our decision-making profit if we're looking to target and so forth.
Quick tangent, because off of clear air, I had to get onto someone on Twitter who literally said Nordstrom's found its low, start buying now. And I was like, no.
Hey, he may be right, but do we have
maybe, but from a chart perspective, I was like, I had to go out almost 10 years. I think it's 10 years to even find some kind of support back in 2009 at 30. But after that, we're going down to 20. There's clear air to 20. So on the same clear air conversation, like that.
Whoever said that's an idiot. Now, if
I normally don't try to pick any Twitter or online battles, but this one I couldn't resist. It's like don't buy now. And I said, even if you buy now, if this thing starts to come back, I would call that a kiss of death and I would short it again.
No. Now, if somebody had said, I love Nordstrom, I believe in this company, I like the various factors involved here, I'm going to start my initial leg of an investment because I think this is overdone, I think the hysteria, hey, I'll listen to that.
Yep.
I'll listen to that. But that is an entirely longer term perspective. In the short term, which technical analysis is where it is the best, when we don't have a support level under current support levels to say that it's done, that is a foolish statement.
Yep. And that's why we're talking clear air. That one just came to mind because of that right there. But
do not.
All right, let's finish up.
I mean, it is a fine thing. It is a tricky thing to try to guess when the bottom is going to be. We don't do that at Tackle Trading.
No.
We do not try to guess where bottoms are going to occur. I mean, you just don't do that. Go find the person that can guess bottoms, and you're not going to hear him talk, or you're not going to hear her talk, because that person is so rich. They don't own an island. They own all kinds of islands.
Yeah.
They own the entire, Pacific Ocean, because that is a exercise that you should not even guess. You should not even attempt to do. If you're going to buy it low, go to Intel, for example.
Oh, Intel.
Go to Intel right now. Go to the same longer term time frame. If somebody says you found the bottom in Intel, I would still say, listen, it's a little premature. I get it.
It's
I have
possible.
In Intel. There is a level of support here that you do at least have. But
if it breaks, it's got plenty of room to run to the downside.
It's got plenty of room to run to the downside. And so, like, conversations on bottom fishing or buying a support or buying low really need to revolve around your long-term view. Because from a short-term trading standpoint, we haven't gotten any reversal signals on Intel.
No, we have not.
Go to the daily chart. One of the classic reversal signals I like is just that close above the 20-day moving average. We haven't even closed above my girlfriend, the 9. You look at short-term price.
Caught up yet? It's still trying to play catch up from these giant drops that Intel had.
And so it's very encouraging if you were looking to own shares, or if you bought shares based on this existing support level. Hey, it's holding it there. But we haven't seen any upward momentum here. We haven't seen any classic trading reversal signals. All we're seeing right now is support holding. All we're seeing is that general price level has come down. It's holding. Now, that can be the beginning stages of a reversal.
Could be.
But that's all it is.
Mm-hmm.
That's all it is. Don't have to go very far to see Facebook. Go back to Facebook.
I do want to see what Facebook's doing because I'm curious how my position's working.
Yeah, it's
right
on
now.
our option report, by the way, guys.
Yeah.
Hey,
I mean,
Gino popped in.
Yeah, I'll just let you know Facebook's on the option report.
No, I mean, from a technical perspective, you have a first test, a bounce off the 200-day moving average. Anyone that's listened to me in my study on moving averages knows that that first test oftentimes succeeds of a major moving average, come down and bounce. But look at the downside on Facebook. If this, because it corresponds nicely, that 200-day moving average corresponds nicely with, Cody's right on point there, don't even have to tell him, corresponds nicely with that previous support level. So we got a major war zone occurring right now at this technical level, the 200-day and a horizontal support level. Now, what happens if you break it though? Where's your net?
Running down to 150 is what you're doing.
Most likely. Most likely.
So what was our target?
I think we hit the target already.
Yeah, I think we hit the target. Like,
you know what's nice about this is over the weekend that we got the setup, right? And the trigger point, sometimes it's past the trigger point when you actually have time to enter on a Monday. You had a good, how long did you have this morning to enter?
you had an intraday setup right here where you got this low base pattern that you could have set up a secondary
2 hours
trigger.
and 15 minutes. 2 hours, a good 2 hours this morning to place that trade still. Look at that.
Yeah, exactly.
And
And actually it's setting up again right now. Look at this.
Yeah.
That you could set up another intraday trigger right now if you wanted to continue playing this to the downside.
Yeah. What's the news behind it? Because I saw the volume come in at 9 o'clock, right at 9 o'clock.
I'm not 100% up to date. It has something to do with regulation. Here, Gino, talk for a minute. I'll go look up the specifics.
Okay. So yeah, it was on the I love shorting Facebook, by the way. I don't know why. I just do good when I short Facebook.
It's because it moves so much. When Facebook does move to the downside, it moves to the downside.
Yeah, it does. And the news spreads fast and it just gets fueled. And I love when the triggers not too far, like a gap below that double bottom there, and just runs that. If you look at the daily, we are hitting the 200-day moving average.
Mm-hmm.
That's what stopped it. So that's why I jumped on. I wanted to show you guys the triangle breakdown on the daily. And it came all the way down. I mean, it hit the 200 solid and bounced. So,
and you could have triggered in on this Friday when it broke the 50.
Yeah. And so I had it on the option report.
Let me pull up the options report right here.
The Federal Trade Commission was also looking into a possible antitrust probe against Facebook. Yeah.
Yeah. So,
all right, the trigger into Facebook entry was 176.73. So it was about right there-ish. So yeah, we gapped past it. We did, but like we just said, you could have done an intraday. Our two targets were 170, which it completely blew through, and 160, but the 200 held it up. So
the 200 mark, look at the 200, how it just totally hit that.
So you look intraday, because what happened where it held up right here was first target.
Now, Facebook's action is a classic example of how intraday price action works. Now, think about all the computers, all the day traders, all the short-term swing traders that are selling this news event, selling these technical breakdowns. And think about the short-term rallies that occur on these short-term time frames. So sometimes new traders look at these short-term rallies and they're like, oh, price is stabilized.
Right.
Now you need to think, I mean, what's happening when it comes down to 200-day moving average? Is that a logical place where a lot of people are going to take profits on their bearish position?
Absolutely. And it's where our students should have taken some profits.
And so when you have short-term profit taking during the course of a day, even on a stock that's getting hammered, these logical points on the chart, the 200-day, tons of people have their target where they're like, all right, I'm going to make money. But what haven't we done for hours now? Are you looking at a 5-minute chart right now?
That's a 13-minute chart.
13-minute chart. Look how that 9, there's my girlfriend. My girlfriend, she loves all time frames. Look how that works as resistance for that block before it takes another leg.
Right there. Is that what you're talking about? Right there?
Yeah. It comes up to my girlfriend. My girlfriend says, listen, this is short term, whatever. You ain't done yet. You ain't done with pain yet, Facebook. I'm going to slap you down. I'm going to slap you down. It breaks support, takes another leg down, huge leg down, mammoth leg down.
Look at that. It's wanting it right now.
You know,
it's wanting to break again.
Walk me through it, Cody. Walk me through it. What do you got? 5 minute?
So this is a 13-minute. I would actually go down to a smaller chart. That way I can get a little bit more.
Yeah, 5 minute triggered already.
And so that, yeah, it's triggering now. And I want to see it.
10-minute triggered.
It's triggering right now because I was going to say, I want to see it close between 164. Close between 164. You can add to the position. Intraday targets. First one's going to be right here at this low. Next one after that's going to be 160. So that's how you can do a quick day trade.
Yeah. So you got the 5 minute day traders already cashing in, but the 15-minute, if it breaks that one, you've got to have a big surge of downside volume. If it breaks, I have a low of 163.64. So if it hits 163.60, watch it break down more.
15 cents
this
away.
Is why these short-term rallies, you need to know what you're doing before you say, all right, it's stabilized, I'm getting in. Because what were Cody and Gino, 2 day traders with day trading experience, doing? They were looking for the next opportunity to come in and join the bloodbath.
Yeah.
As is every other day trader. Are they looking for reversal signals? No. They're looking
late to the party that already started, but you're going to find out where the fun is, and you're going to go join and make it more fun.
And that's why during these short-term rallies that occur during a stock that's getting beat up, don't be a rookie and say, hey, yeah, it's price stabilized, I'm going to get in now. Because the bloodbath is not over yet when these situations occur.
No.
These short-term rallies are not reversal rallies that traders like Cody and traders like Gino look for. They are opportunities to get in to the next wave down.
Yeah, but the next wave down is starting right now because the Dow
5 cents, the nickel. We got a nickel.
The Dow just went negative on the tick. The S&P went negative, and the Russell. So I'm just waiting for the advanced decliners to trigger down in some volume. And yeah, it's so yeah, like you said, Mark, that 200-day moving average saved Facebook. I love the trigger below that 200.
Yeah, this low base forming right now on the NASDAQ. This thing, it's at 7,000. This could be this. There's room for this thing to keep going today.
Yeah, the NASDAQ's really helping the downside.
And this is why tackle trading and the collective set of coaches, you look about the scope of what we've talked about today. Just in this halftime report, we talk about long-term investment, managing cash flow positions. We're now talking about day trading signals. Like we have a lot of things in a lot of different ways. Not everyone's a day trader. Not everyone's a long-term cash flow investor. We got one of the things that makes tackle trading so unique is that the experience we have at multiple strategies, multiple ways of trading.
NASDAQ's breaking right now.
Can help a lot of individuals. That can help a lot of individuals.
Yeah, my CMG is killing it too. Because even if you missed it, it gave you a second entry just like today.
Let's have a little more day trading conversation here on CMG. Pull up CMG. Once again.
It triggered right at the open. But
let's talk about that intraday chart on CMG.
It's triggering right now. It's triggering right now on a 5 minute. And do you have ability to go to a 10-minute on yours, Cody?
Yeah, I had 10 minute.
There you go.
Oh, there's my 9 again.
Oh, she does like playing ball.
So there's a lot of triggers on a 10-minute, definitely a 5 minute, but you whipsawed a lot on a 5 minute. But Yeah, the 10-minute here, if it breaks that 641.75, watch this.
And to tie in the lesson that we've had on the halftime report all day, what starts all these parties? Whether it's CRM and Microsoft on daily charts, whether it's these intraday charts we're looking at, what starts all of these parties is a break of identifiable horizontal support. So we identify that horizontal support that is broken, whether it's on a daily chart with Facebook, whether it's on a daily chart with Microsoft, whether it's a daily chart on CRM. That break of support is what triggers this downward movement. On an intraday chart, we've seen on Facebook, CRM, looking at the NASDAQ that's happening right now, these breaks of intraday support trigger these next legs down. And then day traders have all kinds of signals. But the basis that ties all of these day trading systems together, the basis that ties so many trade setups and trade management techniques on longer time frames like daily charts and weekly charts, are the break of identifiable horizontal support. If you do one thing this week, attend the Step System webinar on Wednesday night. If you do two things, learn and practice how to identify horizontal support. If you do three things, start to practice, identify, and work on the signals you're going to use that when that horizontal support breaks, whether it's trade management decisions on covered calls, or whether it's directional trade signals on daily charts, or whether it's intraday day trading signals on intraday charts. If you do one thing, Step System webinar, because we're going to be talking about directional trading on Wednesday night. Two things, learn to identify horizontal support. And then finally, if you got time, and you do, just don't go to the movies. You don't have to see Godzilla. It was terrible. It was absolutely terrible. Give up video games. Take the time to practice the specificity on your entry signals once horizontal support breaks.
So what you're saying is go see Aladdin.
We got a pop right now happening.
Yeah,
Look
we
at
just
this.
got a reversal in the S&P. Huge volume. Advanced decliners jumped up big. Volume.
Yeah, we did.
Huge. I do not know what happened. News just came out.
Something just came out.
That's the trade war. Something new comes out all the time. That's why trading signals are king. Although that antitrust news on Facebook, that's no small thing.
No.
Thing, I mean, that's a pretty big. Whenever you have the threat of a government coming in and changing your entire business model, is that going to create some uncertainty? And genuine uncertainty, not just, I mean, that goes to the core of the business model of Facebook potentially.
Yeah,
Wonder if that's Trump directed. He's not a
No, they've been begging to be regulated for a while now. They've been trying to kick the responsibility of controlling their own platform for a while. But I don't know how to end the show better than those three pieces of advice you just gave, Mark. So I'm going to not have any last words myself. I'm just going to say, guys, get in the game, go to Step System, like you said, practice those techniques and everything Mark just said. Do it.
And I'll be with my brothers on the Trading Justice podcast today. It will be released later today. So Trading Justice podcast coming out. Another Traders Lounge tomorrow, Coach's Show on Tuesday night, and then the big event we have at Tackle Trading, Step System webinar. Go to tackletrading.com. Up in the right-hand corner, you'll learn more about the Step System webinar, along with a nice little link to register. And if you, for our pro members, or even our non-pro members, if you have any questions, just email us at team@tackletrading, and we'll be happy to help.
All right, guys, we are out.